To me, I think there was a lot of pieces that fell into place in 2025 that were favorable for Ethereum. I think Ethereum can grow even without having any cannibalization or competition with Bitcoin. By year end, our target for Bitcoin is 200 to 250,000. And for Ethereum, somewhere between 10 and 12,000.
Tom Lee begins by breaking a common misconception that Ethereum threatens Bitcoin's dominance. In his words, they're complementary. One is not a replacement for the other. He explains that Bitcoin represents digital gold, a secure, decentralized store of value that has already been validated globally. Meanwhile, Ethereum serves as the digital architecture, the programmable base layer upon which Wall Street, artificial intelligence, and next-generation financial systems can build.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think that they're complementary. So one is not a replacement for the other. And in a way that makes, that's part of our framework. When we think of digital money and digital gold, that's Bitcoin, and that's already been well established, and in fact, that's why many investors will own Bitcoin. But Ethereum is an architecture that we can see Wall Street building on, and AI, and it's not that different than how in 1971 there was two forks. Gold, because the dollar went off the gold standard of gold, became that store of value. But then a whole economy was built around making sure the dollar, which was now synthetic, became the standard bearer. And that's what Wall Street did. And in terms of value creation, both created value. Gold is now a $2 trillion network value, and equities, which really came out of a synthetic dollar, right? We didn't want us to go onto a Deutschmark or yen standard. That's a $40 trillion asset. So I think both come out of crypto, but address different markets. So I think Ethereum can grow even without having any cannibalization or competition with Bitcoin. We know that in the crypto world, products have emerged and leaked into the traditional financial world, and they've been quickly adopted. I mean, stablecoin is the biggest one that really has been so widely adopted. I think that there are a lot of benefits to perpetual futures, that's a little bit outside my world, because I typically focus on cash settled items or even cash traded. But without question, I think you're going to see innovation moving in both directions. To me, I think there was a lot of pieces that fell into place in 2025 that were favorable for Ethereum. One is, of course, the new administration in the US, which is crypto friendly. And the second is the viral adoption of stable coins that have really driven a huge rise in interest and activity levels on Ethereum. The third is, I think the Ethereum Foundation has made a pivot that's much more markets friendly. And I think that that's very evident. Even at Token 2049, we spent time with the Ethereum Foundation, and we had that conclusion several months ago, but it was reiterated really at our time in Token 2049 that, they want to build and modify Ethereum and continue to upgrade it to be in a way that's friendly for capital markets and for AI. So then I'd say the fourth element is Bitmine has helped clean up the narrative around Ethereum. And I think that, so all four were contributors, I'd say. By year end, our target for Bitcoin is 200 to 250,000. And for Ethereum, somewhere between 10 and 12,000. I mean, as you know, Ethereum's basically been basing for 4 years now, just broke out of the range. So to me, it wouldn't be a blow off top, but rather seeking essentially price discovery at a new level. And then at a time when I think there would be a lot of fundamental things happening next year. So I don't think it's the top, but I'm sure, but it is a big level. Be a big level, but a happy level. if we ignore the last 4 years, then we'd look. I would probably say that I'd have a different context. But in the last 4 years, it's been almost impossible for crypto to access capital markets, and it's also been very difficult for people to even have banking relationships. And in fact, as you know, even publicly traded banks, regulated banks, 2 of them were essentially shut down by the government in the last 4 years. So I think 2025 is a lot of pent-up capital. We know that some of the most popular IPOs this year have actually been crypto IPOs, Circle and Figment and, Bullish. I mean, they've been very successful IPOs. And we also know that, like, as a bank, the stable coins, which are really essentially banks, are a lot more profitable than their traditional TradFi bank. So a crypto native business model is vastly more profitable with less employees. So I think that there probably is a lot of need for people to find exposure. But you're right, like, and Arthur's knows ETFs because that was his world before BitMEX. Leverage ETFs is not the crypto industry's desire, but it's someone who's trying to capitalize on the volatility, the issuer, and hopefully that's not going to make this to make the process less profitable for investors, because we don't really want investors to lose money getting exposure to crypto, which they should just generally be long. Yeah, it's been 12 weeks since we started the company. So the close of the initial pipe was July 8th. So it's been about 12 weeks, and Bitmine has benefited from a lot of support from the public and from institutional investors. That's why it's the 28th most traded stock in the stock market today.
The 28th most traded stock.
Yes.
Wow.
Yeah. And I think today might have been top 15 in terms of trading volume.
Where is that volume coming from? That's so much.
There's many vectors, because one, the stock is widely followed by the public, but it's also very widely acquired and purchased by institutions who have really helped propel Bitmine's Ethereum holdings, and especially Kathy Wood's ARK funds, which were a top 10 holding for her. And so, and obviously she has enormous assets under management. The stock is highly volatile. So it's I think it's the 8th most traded options chain today. And in fact, there's also been leveraged ETFs launched. So there's a BMNU, which is a 2 times Bitmine, that also just got options listed. So there's a leveraged ETF with Bitmine that has options. So I think
just give all your money away. Just go away. Trade that dog shit.
So it's fuel liquidity because Bitmine and MicroStrategy combined, and MicroStrategy is, of course, the OG in crypto treasuries, but the 2 of us combined is 86% of all crypto trading volume, of all the hundreds of DATs in the world.
Perhaps one of the most striking parts of the discussion is Lee's view of Tether, USDT. He calls Tether the central bank of crypto and argues that its growth story is far from over. From its early days as a small stablecoin project run by Bitcoin OGs, Tether has evolved into a systemically important financial institution, providing the liquidity backbone for exchanges, traders, and DeFi protocols worldwide. As of now, Tether's circulating supply continues to grow even as crypto markets mature, showing real-world demand, not speculative hype. Lee goes as far as to suggest that at a valuation near $500 billion, Tether might still be undervalued, especially given its profitability and market dominance.
It's very evident in sentiment because, in 2017, there was a lot more exuberance. In 2021 too, both in equities and crypto. I think because of Trump and the divisiveness that he is, and also because of the swoon we had in stocks in February to April, that sentiment still really muted. I mean, we see that on the Fundstrat side. And I guess the second thing I'd add is, I think he's spot on that, crypto needs to really make overtures to both sides of the political side over the next few years, because we don't want a change in administration to result in a complete flip in the in actually the way crypto is regulated. I mean, I think it's actually a really important policy thing he's flagging. But I think that there are probably some things that are important to like democratic stakeholders, such as like UBI or social policy, that I think crypto can, do some work around. I mean, I think UBI is probably functionally only enabled because we have blockchain and, the ability to validate transactions and then finality. And so I think that there is a lot that can be appealing to non-Republicans about crypto as well. 5%, as you said, as you pointed out, was in some ways aspirational, because we were just thinking about, what's the level of ETH holdings that isn't going to be disruptive to the ecosystem, but a level that can actually allow you to have a positive, benevolent influence. And so I think 5% was sort of that waypoint. But we've spent some time with other researchers, and especially thinking about the power law. I think you can, especially in a competitive dynamic, move even as high as 10% without actually disrupting the ecosystem. And then, of course, as you know, a DAT is essentially a permanent holder of ETH. So in some ways, it provides a lot of ballast to the network. So I think it's possible to go beyond 5%. But of course, we still have to get to 5%. And I don't know how expensive it's going to be, because ETH has actually cooperated, because it's stayed in the 4,000 range for now. But as ETH moves up, especially in the fourth quarter, it could get very expensive to get to 5%. I think financial entertainment might even understate really how important everything these prediction markets are doing. I mean, to me, the 2024 election and Trump polymarket and the role polymarket played in calling that election tells me that it's not just for entertainment. It's really serious wisdom of the crowd knowledge that's coming into play. As long as these betting markets don't influence by itself, by reflexivity, the outcome. But to me, I think that's, as we move to tokenized equities and real world assets, and when you overlay that with prediction markets, that's really the alchemy that's going to cause the financial system to actually be a lot more liquid and for capital to be raised more easily. But I'm overglossing. I mean, the Ethereum Foundation has been a great organization to dialogue with. We're very aligned with them. And Tomas has been great. We really want to help bridge the TradFi and capital markets world and their needs and the specs that they care about to be heard properly by the Ethereum Foundation. So I think, us being a large holder of Ethereum has given us a place to be a center point of that conversation. And I think that's important. We have been meeting with a lot of the core developers, and and we had a great meeting with Vitalik. And I don't want to overuse the idea, but because Bitmine has so much Ethereum, of course, it's a source of liquidity and scale. So the overused word is kingmaker, but I think we can have a role in helping shape how some of the DeFi projects that get seeded, and we can also make selective investments. We're planning to use 1% of the balance sheet, which is about 130 million right now, to invest in projects, whether it's crypto native or traditional. Like, we made a small investment in ACO, which is the WorldCoin treasury. And I think that we're increasingly viewed as not just a DApp, but kind of as digital infrastructure. But that was our thesis from the beginning, that we're providing a security function when we stake, but that's not the only role that a large holder of Ethereum would play. And I think there's this informal role that we played, I think, which is helping simplify and really improve the narrative around Ethereum. And I think that's also been helpful, because that's how TradFi can also understand, as banks want to build on the blockchain, which layer ones that they want to work with, or, which organizations. And I think we're sort of that non-foundation entity that exists. I think as a best practice, it's better that, Bitmine have a more consultative view on development, helping identify priorities. And I think even acting as like a diplomat or liaison or a third party intermediary because I think that would play to our strengths. We have a lot of connectivity to the traditional financial world, and because we're an existing rails and operate in that side of the world, that's what would be more of playing to the strengths of Bitmine rather than, as you're pointing out, protocol design. We don't want to stretch beyond our capabilities. I think if I took JPMorgan, for instance, and this is something we've written about at Fundstrat, that they are operating and supported by 313,000 employees, but a JPMorgan built on the blockchain might only need 20,000 employees and operate with far greater clarity and vision and efficiency. So JPMorgan may end up being, especially using AI, more of a tech company. They're replacing humans with tech spend and using the blockchain for finality and security. And the multiples of banks should change, going from trading at price to tangible book to actually having a PE multiple. And Kathy Wood has pointed this out. That's exactly what happened with Costco and Walmart, that they used to be traded like typical consumer staples, 15 to 16 times earnings. But because they essentially systematized their business, Walmart and Costco trade 35 to 50 times forward earnings. That's a higher PE multiple than NVIDIA, which trades at 30 times. Because we have to keep in mind, and that's actually equity value. So it's not the value of the Tether token, but really the value of the issuer. Tether has been the central bank for crypto. I mean, in 2017, if we go back, they were incredibly novel and ingenious. I mean, they were Bitcoin holders, but they've proven that they're not just Bitcoin OGs. They created a business that acted as a central bank, and I think even companies or entities like Binance, et cetera, wouldn't really have existed without the existence of Tether. And in the ensuing years, Tether has actually increased its circulating supply. If you look at how much Tether has grown, its usefulness is growing as crypto has expanded, and even as crypto has become more regulatory accepted, Tether's growth rates accelerated. So to me, I think it's pretty evident Tether is a growth company, and at 500 billion, it might actually be a bargain. I mean, we should maybe think about the fact that Tether, when does Tether flip JPMorgan as the largest bank in the world? And I don't know Tether's financials, but because of how much growth they've achieved just even in the last few years, I think we have to realize that this may be, as Arthur says, one of the best banks in the world.
Tom Lee paints a broader picture of where this is all heading. He believes that traditional financial institutions like JPMorgan will have to reinvent themselves on blockchain infrastructure. A JPMorgan of the future, he says, might operate with 20,000 employees instead of 300,000, leveraging AI for operations, blockchain for security and finality, and digital assets for settlement. This transformation will not only make banks more efficient, it will change how they are valued. Instead of trading near book value, they could earn textile price-to-earnings multiples, similar to how Costco and Walmart re-rated when they systematized their operations.